Hello viewers, welcome to my channel Sensor 360 Investor. In this video, let's get an update on market action and build upon the review from Thursday night. So let's start by taking a look at the long view, and here we have the S&P 500 on a weekly chart. So we can see, like, here's the Great Recession lows, and pretty much the market's been in a pretty long bull trend, secular bull, by any stretch of the imagination. And on this, we can see that the 200-week moving average is kind of been a good guidepost. So we've touched it here, we touched it here, touched it here, undercut through the COVID, but it was pretty sharp, so it was more like a crash through. And then we found support back here and then move up. So on this pullback here, the 2022 stuff, pull back in again, we come into support zones. It tested a few times positively and then kind of moved up. So we're now kind of pulling back. So within the overall secular view, it does look like it's just a pullback, and it's sitting at support levels right now. So for it to get down to this level here, it's about 3% away. So it's getting close if there's any more downside. So we may be looking at 3, 4, 5% more if there's additional downside. If we look at the sentiment indicators or some of the derivative indicators, we can see relative strength is well over in oversold territory. Stochastics are well oversold, and the MACD, which is lagging indicator, is kind of in a downtrend, which one would expect since price is in a downtrend. And then volume's been kind of reasonably steady through this period, starting to poke back up through this upswing here, and it's been holding steady. So if we now drill down so basically from what the weekly view is telling us, is that there may be worst case at this stage, and worst case would be obviously we could continue to go down and test certainly the 2002 lows, which would be another 15% away, or where, because there is significant support just below, we could travel about another 5, 6, so about another 5% from where we're at, and that would really stretch us into the oversold territory. But between now and then, we could easily see a wicked short covering rally. So let's now take a look at the daily view. So we are on the daily, and we can see there's the 2020 lows, which is COVID, and then down here we have the October 2022 lows. That's 2020, 2022. And then since these lows were established, market went back into an uptrend, making higher highs, higher lows. And then here we made obviously a higher high. So we're still above this low here, and we haven't taken that out yet. But we did cut below the 200-day moving average, and we did find support earlier, so we've undercut that now. Again, if we look at the derivative indicators, market is showing extremely oversold and right for a turn or swing back up. So the market could find itself just finding out any of these support zones where it can hold. Now, if it doesn't hold, then we're going to be stretching way into oversold, and the next support zones are probably down here, which is about 6% away. So on the weekly, we're looking at around about 5%, but the chances of us going that deep are in the short term probably a lower probability, only because of where the technicals are saying that the market is way oversold. Now we may get a bounce, a relief rally, short covering rally, and then we could find out where sales continuing to move on down, and that would obviously, in this bounce, we'll have to watch for volume. to see what volume is telling us as to whether this is it and we're right and we're good to go into the year-end rally, or there's still some shaking that needs to happen here. So that's the S&P 500 in the long view. And then if we also take a look at, if we also take a look at the 1 hour view in the short term, so we see obviously we've got a clearly defined downtrend on the hourly level, and this is still looking pretty bearish at the over here. So we would have to see if we see an upswing, we have to start to see the market moving up back above that 4,200 level, and then through it to get a meaningful bounce. It's interesting that the market stalled and then churned around this level at the 43.87. So around just say 43.80. So that would be a key area to watch. If we can get we would, in order to try and get confirmation of the year-end rally, we would definitely have to get above 43.80, and then we'd have to find out sales getting above, climbing back 4,500, and then if we're going to make a beeline, a meaningful run into year end, we'll probably have to get back above 4,600 before the year is out. And just on that basis, let's say we can make a move from about where we're at. That means from current positions, the market would rally about 12%. If that all plays out, and that's a big if, as always, predicting the future in the markets is yeah, crystal ball prediction stuff. Nobody really knows how these markets will react, but so just using the seasonality and past precedents to see if the market's going to rhyme. Certainly in the very short-term time frame, it still looks bearish. And then if we go back up to the daily, we can see overall the trend is down, but near some levels of supports which could hold, and we are well oversold. So that's that could be a sign towards some kind of bullish tendencies. We go further out to the weekly, and then we can see the weekly is also at some levels of support and meaningful support zones where it's currently sitting. And so the market could experience at least a short covering rally from here, and maybe that will wake it up. And if we go further out in the time frames, let's go to the monthly. And on the monthly levels, we can see that we're still kind of moving up, and we do have this slightly kind of bearish flag pattern here after this pullback down on the monthly here. However, we can see that the indicators here are nowhere near oversold. In fact, they're closer to the middle of the range, so that, which is positive in a way. If we can stay above the 50s here, and it can stay above the 50s here, which means that at least the monthly trend is reasonably healthy. So a lot to unpack and a lot to digest. So Monday's action will be interesting. So let's go back and take a look at the 4-hour view. So this is kind of a half day. So we can see again, still in a downtrend, and we would probably, again, this reinforces that we would need to get above, back above the 4,200s, and ideally we need to get back above the 43.80 zone, and that's what we're going to be looking for to get confirmation that we've reversed. And then obviously that would also give us probably some kind of trend confirmation as the downtrend reverses or changes behavior. So that's what to watch out for, and well, let's see if we get some kind of relief rally over the next week or so. Okay, so let's wrap this video up, and thanks for watching, thanks for listening. If you're not a subscriber, please consider subscribing. I will see you on the next video. Thanks, goodbye.